Welcome everyone, good evening. Uh, Welcome to another important lesson on super trade. Today we'll be discussing about different types of movement in stock, prices, indices, commodities or any particular instrument. It will be applicable to every kind of instrument, whether it's a crypto or a equity or any kind of derivative. So there are three different types of movement in the stock market with regard to any particular instrument. Right? One is sideways movement or a range based movement, wherein the stock prices will vary in between a defined range. There'll be a defined higher, defined low and defined high. Then there could be an uptrend wherein a higher high and higher low is created, and it could be a downtrend, right, wherein lower high and lower low is created. So let's first understand a range based movement. In a range based movement, the price may move in this manner. It will go up, come down, go up, come down, go up, come down, go up, come down, and it will vary in this particular defined range. You see here, it is moving in a certain range, you can say, all right, certain range. So we call this also as a range based movement or a sideways movement. Sideways movement. Sometimes we also call it as a stage of consolidation. It generally happens when any particular stock price has rallied up or rallied down. So it basically, this is the time when the stock is taking a breather to either continue the downtrend if it was in a downtrend, or change the trend to an uptrend, or if to continue an uptrend if it was in an uptrend, or change the trend to a downtrend. So this is a sideways movement. Now generally, swing traders, if this range is quite if this range is what around 5 or 6%, then they can make a lot of money in this range, because they can enter here, exit here, enter here, again exit here, again re-enter here, again exit here. So they can make a lot of money in this particular range, but the range has to be defined. It should not be a very small range. It should not be a very small range, because in that case you will not be able to make too much of money. So this is sideways movement, and remember, most of the time you can say around 60 to 70% of the time, you cannot allocate a percentage, but yes, around 60-70% of the time you'll see that most of the stocks, they are in the sideways pattern movement. All right, but how to recognize this pattern, we'll see when we go to the actual chart. So this is a sideways movement. Now there could be also an uptrend and a downtrend 20 or 30% of the time. So what is an uptrend? In case of an uptrend, every time a stock will create a new high and a new low, which will be higher than the previous high and previous low. So let's say, for example, now the stock prices go up, come down, go up, come down, goes up, come down, goes up, comes down. You see, now you can see if I have to put it in a range. Now this is also an increasing range, you can say, but the thing is, the trend is up. You see here, the trend is up. Every time it creates a new high. You see, this is a high, this is another high which is higher than the previous high. Here it is higher high. This is initial low. Then you can see this is another low which is a higher low. The low is higher than the previous low. Then again, this is again higher high. Why we call it higher high? Because this high is higher than the previous high. That's why we call it as higher high. And again, this is a higher low. So why we call it higher low? Because this price is higher than the previous low. Again, this is a higher high. Again, this is a higher low. So we say that the trend is up. So we can enter into this at this range and exit here, or may continue to hold. Why? Because in that case the stock will retrace a little bit, and again it will give me a higher profit. Again retrace a little bit, again it will give me a higher profit. So it means somebody may enter over here and exit over here. So it means this is their profit that they could get. But an investor could enter over here and remain seated till this point, don't you think that he will be able to make a higher profit? So in a trending market, the longer you remain in the trade, the higher will be your profitability. So you have how to find out a trending stock. Again, we'll look at the chart and we'll find out in a while. So this is an uptrend. We call it as an uptrend. Uptrend. All right. So in an uptrend, even if suppose you make a mistake of taking an entry at a wrong point, let's say for example you make a mistake of taking an entry at this point, whether you should have taken an entry here, now no heaven is going to fall. Why? Because you are in uptrend. It will fall down a little bit and again it will rise up, cover up your cost, and then it will give you a profit. So that's why we say trend is your friend. If it's an uptrend, even if you enter at the wrong point, if the stock is in uptrend, it will surpass your cost price in a very short period of time. Then a downtrend. So in a downtrend, what happens? Just exactly opposite. So now what happens here? Now the stock will again move up, come down, move up, come down, move up, come down, move up, come down. So now what is happening here? You are creating a lower high, and you are also creating a lower low. So here you have a high. This high is lower than the previous high. This high is lower than the previous high. This high is lower than the previous high. And this is low. So you can say this low is lower than the previous low. This low is lower than the previous low. And again, you can say that this low is lower than the previous low. It means you should never enter into a trade if it's in the downtrend, because maybe you enter over here and it will rise up here and will give you profit. But if you are not able to exit over here, you will not get money any time to exit. It means it will come down here and then it will go up a year. Maybe once you will get the chance, but again it will fall down big time. So it means you are stuck in the stock for a very long period of time. If it's a good stock, it will go up eventually. All right. That's why I say invest always in good stock. So even if you are making a wrong decision to enter into a downtrend, eventually it will go up. You have to hold it for 6-7 months. It will go up. So nothing to worry about. But if the fundamentals of the stock is not good, then you should never enter into that particular stock. Clear? So this is a downtrend. When I connect this point, you see here the stock prices is moving down. So you have to recognize the trend and then take a call whether you should enter or you should not enter the market. Now remember, every stock has a behavior, a pattern. All right. Some stock will rise up 20%, fall down by 7%, rise up again 20%, fall down by 7 or 8%, rise up again 20%. You have to understand the pattern. How to recognize the pattern we'll see in the later lesson. So let's figure out how to find out the trend. Remember, when you're doing price action means basically you're trying to find out where is the demand and where is the supply with regard to any stock. You always choose a higher time frame, daily or weekly. Don't go below daily. You can go below daily only, when you are trying to enter into any particular stock. We'll come to that point in a while. Now you see here, Apollo Hospitals, for example. If you see Apollo Hospitals, so don't you think this is in an uptrend? If I have to draw here, don't you think it is an uptrend? Because it is creating every time a higher high and a higher low. You see here. So this is high, this is low and high. Then again this is high, this is a low which is higher than the previous one. This is again high, this is low. So this is again high and this is low. So it means the stock is an uptrend. There is nothing to worry. You cannot get stuck for long in this particular stock even if your entry is wrong. Eventually it will create another high which will be higher than this previous high, and when it makes, you can exit the trade anytime. So you will be profitable. Now how to do price action? Price action is basically trying to find out what was the behavior of the price movement in the past, and by looking at the behavior of the price movement in the past, we can take a call in the present. Now why is it so important? Because see, every stock has a defined price point wherein the bulls are sitting there, they will take an entry at that point, and a selling point wherein the bears or the bulls who have entered will now turn into a bear and they will sell off their stock to book the profit. So bears are not, a new being. They are the bulls who have purchased, and at the top they are selling. They have ended up becoming the bear. All right. So now you see here, if I take Apollo Hospital, if you see the trend is clearly up. But do not take this into a lower time frame, because lower time frame you will not be able to figure out what is the trend. Is it up or down? You see, you will think that trend is going down here. You see, lower high, lower high, lower low, lower low. So if you want to find out the actual trend, you have to zoom into the chart and find out where the trend lies right now. So trend is clearly up on a daily chart. On a weekly also the trend is clearly up, as you can see. So how to perform the price action? You see here, let me go in the past. See, now you see here at this point, you see many a times at this point there is a rejection that is happening. It means the price trying to break up but it's not able to break up. Then again it comes down, again goes up, tries to break up, it will not break down hua. Then again break up, no, it did not happen, came down, again went up again. So it means in this particular price range the price is reacting. This range is acting as a resistance. So what I can do here now, that is not one particular point, you see here. So you have to draw a particular range wherein from where the stock is rejected, and I will try to exit from that point if I have entered at a lower level. So what I'll do here, see, I'm checking this square box here. All right, I'll click on this and I will take it here. See, you see, these are the points, no? So it means I have to take it from here. So I'll take it here and make a range here. All right, this is my range. Now the thing is, this will act as a future reference point of reference as well. So let's say if I extend this line to the right, extend this line to the right, sometimes alignment goes wrong here. So you see here what has happened. I have found out a point of reference. Now the thing is, this is the resistance. It means whenever there is a break up over the resistance, I can enter. So you can see here, if you would have known this point of resistance, so you would have taken point entry at a lower point and would have exited at this point. But the moment it is broken up, you can enter at this point. So you can enter at 1575 or so, and you can take a ride a 180. And you say, sir, then what happens? It suddenly fell down. Yes, it fell down because during this time, you see, February 2020 to March, there was a COVID scare. So erratic movement in the stock has happened. That this kind of sharp fall doesn't happen all the time. All right. So again, you see, when the price went up, you could again enter at this point, and you see the price comes down to this particular range, but again takes a rejection and moves up. So here again you can see this range is defined a little bit. See, from here 17 February 2021 till up this point. So what I can do here, I can draw a box to define the range, and whenever the range is broken, I can enter into a trade. You see, this range is broken, I can enter into a trade. Let's take any particular stock that is more volatile. Reliance Industries, if I take it, say for example. This video is going to be long, so please stick with me because a lot of things I have to teach you here. So now again you see here, you see how can I find out which is the point of resistance and support. You don't have to go too far. For practice we are doing it, but now you see the price is over here, so it doesn't matter whatever happened here because now the price is over here. So my point of concern is this point right now. So you see here what has happened. I can see this is the stage of consolidation. You see this around this point, the stock hovered around in this range between 27th October till you can say 30th August or so. So it means, do you see here, I can draw a line over here to define the lower part of the range. Okay. So this will be my reference point for future as well, not for only now but for future, because there is very likely when the price will come down to this point, it will again bounce up from here. So I will leave this drawing like this on my chart for until the price goes very far away from here. All right. So this is one range I have to. What is the other range that you can take care of? You see here this price range. You see here it acted as a sub resistance here. You see here this point here, and you see if I take this further here at this point. So remember, sometimes resistance, many a times resistance, it may end up becoming a support, and that point becomes very critical. When the same zone act as both resistance before and support afterwards, or vice versa, that point is very important point. So let me draw another point here. So what I'll do, again I'll choose this one, and I'll take this point here on the higher part of this thing and draw this one here up till this point. Don't take it too far, because now the candle has gone down, but it has not been able to close down. So I'll not take this point. So you see here we have 1 point over here, 1 point over here, 1 point over here, and you see again a support has been taken at this point. You see here, let me zoom out. You see here, gone up, came down. Now this range, then this range was broken. Then you see here support it has taken, it has gone up, come down to the support. You see, come down to the support, gone up, again come down, tried to break the support but could not break the support, again went up. All right, again went up. So it means, suppose if I enter at this, suppose I have seen here that this point was a resistance, right? See, price was not going up, so resistance, and it ended up becoming a support over here. So this range is very strong point for me, point of reference for me. So now suppose if the price comes down here for Reliance, let's say the price comes down here, all right, and after it comes down here, I will not enter at that point. I will wait for it to go out of the range. All right. The moment it goes out of the range, I will enter at this point. That is 2425, 2426, something like that. And where will I exit? I will exit, try to either first I will exit half of my holding at this point. So it means I have taken an entry as 2428 and exited at 2584, and half of the points I will exit here. Half of my stocks I'll exit here. That is the reference point for exit. Where to exit, if you don't know, then we can exit here, or if you are more adventurous and it's a good stock, you can exit entirely over here. But I say, why you want to take a risk even if it's a good stock? So half of the profit you book here. Suppose you would have purchased here 100 shares, 50 shares you book profit over here, and remaining 50 you can book profit over here. Then this point is important point for me. Why? Because this is acted as a resistance. Now what happens when the price goes up? Now suppose if the price goes up here, I will not take an entry here. I will wait for the price to come down and test this level. So does it act as a support? Because previously it has acted as a resistance. And if it bounces up from here, then I can take an entry at this point and again take a ride up. All right, clear. Let's take some other stock. Let's take Hindustan Unilever. So you see, so clearly the stock is an uptrend. You see here, higher high, higher lows, higher high, higher low. If you see the weekly chart also, the stock is an uptrend. So no problem if you get stuck and the price is falling down. You will, if it's an uptrend, it will give you profit eventually. So what are the point of references for me? So currently what are the point of references for me? All right, let's take a look. So what is the point of reference for me now? You see here, this is the point where the stock is, you see, at this point. Let me mark here easily. So here one, here another, very close by is taking a resistance here. Then you see this resistance has become a support over here, then over here. So I can extend this line over to this place. All right, so let me do it. So again I'll take a square zone here and I will pull it at this level. I will take this point as well into consideration. All right, this point you see here, I'll take this point, sorry, I'll take this point, this point, this point, this point, and you see going ahead this point, also some of these points. So many points of references we have over this point, over this area. So let's take it here. So okay, this is a point of reference for me. Alright, it takes care of a lot of. Alright, so now this is a point. It means if the price comes down here and bounces up here, it will give me an opportunity to enter the trade. But I have another point of reference here. You can see another point of reference here. You see this point, and this particular point. Let me show you here. You see here, this point you can see. Alright, this point you can see, this point you can see. Alright, so let me draw that. Later in the videos I'll also show you how to draw the trend lines along with this price action. That will come in the next video. So I will take this point here. You see, I'll cover as many point of references as possible. So this is a point of reference for me. Now important thing. Suppose now the price is taking, you see here, Hindustan Unilever, the price is taking support at this level. Alright, once it tries to break down, but it was not able to break down, it went up again. So what you can do here, you can enter at this point. And when you enter at this point, at what point you will exit? You can exit here around this point. It means what is the range you are getting here? What is the price that you can get here if you enter? Even if suppose if you enter at this point, how much? You are getting a 15% return approximately. But let's say hypothetically, let's say if after your entry the price comes down, then when the price comes down, you know this point of reference already have drawn from the past. This point of reference have drawn from the past. So suppose if you enter and the price comes down, then what you can do is when the price hits this point and goes up, you can average at this point. In fact, what it will give you even better profit, because now when you enter at this point, those equities that you have entered here at this point, it will give you profit all the way, and the other one that you had entered over here, it will give you break even. You can exit the entire trade over here, or you can continue to take a ride and get even a higher profit here. Alright, you can get even a higher profit here. Let me choose some other stock. Let's say HDFC Bank. Alright, now HDFC Bank I've taken. Again, clearly you can see the stock is an uptrend. Now this fall happened during the COVID, during that time. So please ignore any kind of sudden fall due to phenomena that cannot be controlled. Yes. So you see here it had made a resistance zone here and it could not break and it came down from here. But right now where the stock is, you see stock went up here, came down, took a support here, went up, came down, took a support over here, went up, came down, took a support over here. 3 times it has taken the support. Where it has taken the support? At 3 different points. Where it has taken the support? It has gone up here, here, exact same point you will not get, more or less points you will get. So that's what you have to see. So it means after after going up from here, it came down, took support, came down, took support. 3 times it took support here. So don't you think that there is a very high possibility if the stock further comes down here, it will take support in this area and go up here, higher up. Alright, so let me draw the my favorite rectangle. So you see here, this is the point, this is the point, this is the point approximately, and this resistance point I have to take, this point also I have to take into consideration. So this point, let me draw from here, because this is where the consolidation was happening. So little bit here and there doesn't matter. You are an investor, not a scalper. For a scalper it will matter a lot, but for a swing trader, an investor, it doesn't matter here then a little bit. So now what happens? Now I will wait. Patience is all about a game of patience. So if the price comes down here, I will not enter at that point in time, because the price can further go down here. After the price bounces up from this point and goes out of this rectangle, then it gives me the confirmation that I can enter the trade, and I can enter the trade around at this point and exit to the nearest high. It means at this point. So it means if I enter at this point and exit over here, how much of profit? 16 or 17% of profit I'm getting. Right, exit is easy, as I've told you. How exit is easy? Because I know the previous zones from where the stock can return again to the, this is one level and this is another level. This is another level. So if you want to be safe, even if you exit at this point, if you are entering here, the stock prices comes down, and many users said, what if the stock comes down, doesn't go in the rectangle, and if suppose stock price from here it goes up, then I've missed the chance. No problem, forget it, you missed the chance, you'll get another chance in future. And there are not only one stock, there are multiple stock. You can do the same to many stocks. Some stock will give you some chance, all right, but do not enter midway, because you don't know whether from this point the price will go up or price will go down, because you are in between the reference point. So do not force your trade. If you try to force your trade, then you're taking unnecessary risk. Don't do that. So sir, how long we have to wait? You have to wait. Just like a hunter who is chasing a lion, and he is with his sniper scope, he's there. You have seen the Discovery channels, some beautiful pictures of lion going in, chasing some deer or everything. How for how many days the cameraman and the crew, they hide themselves to take those shots, sometimes for weeks at a time. So it's not like everything is not easy. Stock market will not give you money if you don't have patience. So you can do this price action for many stock. At some point in time, some stock will give you money. So do not force enter. So you wait when the price will go down, and then you can just wait up here where price will go down here, come up here. You can take an entry and exit at this point, or exit at this point, or half exit here, half exit over there. One more stock I'll take, any particular stock. Which one should I take? Let's take HDFC Life. HDFC Life Insurance. So again, the stock, again, if you see the long time frame, right, the stock is in the consolidation stage, right? It was at this point. From here it was uptrend. Now this big fall was again the corona fall, and then it rose up, higher high, higher low, higher high, higher low, higher low. Then it has made a lower low here. It means the trend little bit changed, but no problem. You see here, can you see this particular point from where you should always try to zoom out of the chart to see where it is. Now I don't have any data here before, because the listing happened in 2017 only. All right, so you see here, don't you think this is an important point? This is an important point. This is an important point. All right, the same point you carried forward over here, important point. The same point here, it tried to break down, but it could not break down. All right, clear. So let me connect these points. Everything is just like the work of an artist. So I'll take this here, all these points you take, and you draw a rectangle here, a line. Try to cover as many points as possible. Don't make it too wide, don't make it too narrow. Important points you have to cover. So you see here, this resistance goes up 3 times resistance, then broke the resistance, could not. It came down, acted as a support, gone up, again support, gone up, again support, gone up again, came down but could not break the support, went up. It means now I can enter the trade over here. It has given me the signal that I can easily enter the trade over here, and if I enter the trade, I can exit at what point? I can exit at this particular point, at this point. So it means from here to here, what is the profit point? Around 9 or 10% you will get. All right. Nine or 10% you will get. But sir, what if I enter here and the price falls down? What if I enter here and the price falls down? No problem, dear. Where you will average? You see here, you have 1 point here, 1 point here, and you know this is the point of support as well here. So nearby. So what you can do here is draw another line. So you see, I'll connect these points here. So if suppose you enter and then the price fall down, nothing to panic. It's a very wonderful stock, awesome stock. So if suppose the price comes down, then I have got this point to average. Then you say, what if it falls here, dear? Like if it falls further down here, there is something wrong with the company. But the thing is, such a big fall will not happen unless there is something wrong is happening with the company. That's why I said even in good stock, just invest with 5% of your money. So even if further falls here, again you can put it in average if it's a good stock. You see this is the point here, right? So let me draw the line here. So you can further average here. So this is how you can take the trade. No, nothing is required, right? This is known as price action. You need to practice more and more as much as possible to figure out how if any particular stock behaves. But you can even refine this strategy, whether if it's going up, should I take this entry or not? You can refine this even using certain indicators and some other things. That I'll be covering in part 2. Hope you have enjoyed the video. Thanks and keep practicing. Bye-bye.